Welcome to Power Charting. I am your host, Bruce Fraser. We have a very special guest today, Roman Bogomazov, who is a kindred spirit because he is a Wyckoff Method educator, and in my opinion, is the best Wyckoff Method educator there is in the known universe. Roman, welcome to Power Charting.
Well, thank you, Bruce. Thank you for this introduction. And as always, very, very happy to be here.
I'd love to collaborate with you. I'd love to talk Wyckoff with you. And we're going to have a philosophical discussion today about the whole Wyckoff Method approach. So we will discuss Roman's Wyckoff trading course because he's beginning a new education cycle in the fall. He has an invitation for you to attend complimentary the first episode of his upcoming courses. And we're going to have a discussion today about the stock market, and we're going to do trade analysis of some recent trades and do some Wyckoff analysis and discussion through those trades. But first, the TSAASF is going to have their annual conference on September 12th. This is the 50th anniversary conference for the TSAA. This year it's going to be a virtual conference, so you can attend right from home. If you are a member of the TSAA, you can attend for free. A small charge for those that are not members, but become a member, become a part of the TSAA. Incredible lineup of speakers here. You can see Linda Raschke, John Bollinger, Arthur Hill, Martin Pring, Joe Turner, Craig Johnson, our very own Roman Bogomazov, Rich Ross, and Akshay Chinchikar. So it is going to be just a star-studded day of technical analysis, and please join us, attend tsaasf.org. So upcoming this fall is Roman's normal teaching cycle, and this follows from the many, many years of teaching technical analysis and the Wyckoff Method at Golden Gate University, where Roman and I both taught and were mentored by Dr. Hank Pruden. And so these courses are very special. Roman has continued on in this tradition with the Wyckoff Trading Course Part 1 and Part 2. And then each week we have the Wyckoff Market Discussion, which is a discussion about major markets, stocks, current situations, and we do this as a real-time analysis. Roman, tell us about the upcoming teaching cycle.
Well, first of all, I'm so happy that you mentioned that the origin for all of our classes come from Hank and come from Golden Gate Universities. Unfortunately, Golden Gate University no longer, has those classes just because of the financial difficulties that the university has had. And so we wanted to preserve this knowledge that Hank and Bruce have created for so many years. And we wanted to put this online for everyone else, even though Golden Gate no longer has this program. Wyckoff Trading Course 1 and 2 is kind of a fundamental courses for us. Wyckoff Trading Course Part 1 is all about knowledge. So there is a lot of knowledge, Bruce, as you know, in Wyckoff methodology, and you have to think about how do you analyze the market, how do you analyze the price structure, how do you go through the selection process, how do you actually tactically trade your analysis. And then as we go to Wyckoff Trading Course Part 2, this is all about execution. This is all about where do we actually enter? How do we identify the stop losses? How do we size the position? How do we move the stop losses? Where the first signs of the deterioration of the trend? How do we exit it? And so on and so forth. And then obviously Wyckoff market discussion. This is the class that Bruce and I conduct on Wednesdays. And this is just an amazing class because students have, you could see the analysis, the live analysis unfolding, from week to week, and they could understand how the logic, Wyckoff logic, is being applied, to the market analysis. Bruce?
Roman, there's so much noise out there today about trading styles, and you see these advertisements on, say, YouTube. What is it about the Wyckoff method, the Wyckoff trading approach, that makes Wyckoff so special, so unique and valuable to traders when it's a methodology that's over 100 years old?
Well, there are a couple of thoughts that came to my mind as you were asking this question. When we talk about the markets and trading in general, I think every one of us, every trader should have a set of beliefs of how the market functions and how we trade that functionality. And in our case, we always think about institutional presence, that it's institutions that create the trends, whether up or down, because they have big size. So therefore, using our charting skills and the ability to analyze what we see on the chart uh, brings us to the recognition of where we see institutions operate in which securities, and what do they exactly do. Are they buyers or are they sellers? And if they are buyers, to what degree? We want to define the bias of the potential trend. We want to define the timing, and we want to understand the character with which the price could move. So Wyckoff methodology, to me, Bruce, kind of allows us to go through this analysis, identify and select those type of securities. Bruce?
So the big institutions, the large, what was referred to as the composite operator, leaves footprints of their actions and their campaigns on the charts. And so if we know how to read and interpret the charts and how they're structuring their campaigns through their purchases and their sales, we can see their intentions on the charts through the Wyckoff method analysis.
Absolutely. And also another thought, we could identify institutional presence, we could understand their motives behind their buys and sells. But also, and I'm going to talk with the words of our students, as they're taking our courses, whether this is WTC course or whether this is, Wyckoff market discussion course with Bruce, what students report to us is that they start to understand the price structure better. So they kind of understand the different environmental regimes, trends, consolidations, and they understand that consolidation is going to take some time and it's going to have different phases. And we could define the timing as to when the price is ready to leave those places. So I find it's very fascinating, Bruce, this feedback from our students that, in 2-3 months of studies, we usually have the feedback where they're like, yeah, it's, I could see the structure, I could see how the market moves, and what it could potentially do next. And I think it's a very, very significant educational development for them.
Any trading methodology is a methodology that requires the achievement of and the creation of mastery. And so mastery is a process that takes time. And I would say that through our classes at Golden Gate University and your Wyckoff trading course, is that if anything, you accelerate and compress the mastery process. You don't take it away, but I think that you do a superb job of accelerating the student to a level of mastery that they would not otherwise be able to attain on their own by themselves.
Well, I'm usually very reluctant, to praise our own product. I mean, that's just my personality. But I think you're right. I mean, we've been at it and you've been at it for decades. So I think that we know a thing or two about the method. That's number one. Secondly, I just want to reiterate that for all of the viewers, the listeners. I don't want to for you guys to think that, or you can take the course and that's it. No, as Bruce alluded to, it's the process, it's the mastery that you have to develop. So it takes time. So even though students report in 2 or 3 months of studies, a really good progression, that doesn't mean that they are ready to apply this knowledge consistently and successfully in the marketplace. So it usually takes a year and a half to kind of like get accustomed to all of the Wyckofian concepts, and then to, more importantly, Bruce, to develop the skill to see it on the chart and to be able mentally to actually execute. So it's this process is much longer than just one class.
And the mastery process is something that I know we feel this way, that you never ever reach a point where you say, oh, I have mastery. There's always some level of skill and ability that everybody at every stage of their own process is trying to achieve and get better at. So it never ends. It goes on and on. The educational process is an endless process. So with that, let's get on and look at some charts. And any final comments before we move on, Roman?
Well, definitely check out complimentary sessions, August 31st, September 1st, and September 2nd. All 3 classes attend for free. If you can't, just sign up and you can receive the link for us later on and just watch it at your convenience.
So wyckoffanalytics.com to sign up for these classes.
Absolutely.
Okay, well, we're going to change screens here, and so we will be right back. Let's take a quick look at the stock market indexes. Here we're looking at the S&P 500. Roman, what do you see here?
Well, first of all, let's just acknowledge that the whole trading range has started in January of 2018, and we basically were deviating in price around this trading range. Secondly, we have to recognize that the COVID decline is done, and with the latest run up into the all-time high, and we're almost there. If we could just look at the cash, we could look at the continuous contracts, so those are slightly different, but we are up there. And currently we're still in the intermediate uptrend since the March low. So that would be my first observation, Bruce. And then I think there are quite a few things that could be said about the actual leg up. What's the momentum, what's the volume? So why don't we go through that? Well, what are your thoughts, Bruce?
Well, the market basically hasn't gone anywhere since February. I'm disappointed.
Yeah.
Well, being on a more serious note, the S&P is right now at this moment flirting with its highs that it made back in February. It's probably a natural source of resistance in that there will be sellers that will be selling stock because they have the memory of the prior high from February. This may create a pause in the uptrend, maybe a trading range of sorts at this point in time. But the trend itself is pretty robust. It's incredible reversal and V bottom and uptrend off that March low. So just with that in mind, I think what's happened here since March is quite incredible.
Yes, and we obviously had a big push up off the low. So this is the momentum kickoff. This is where institutions, and we see this in the volume signature. Remember, we've talked about how we want to identify institutional presence. How would we do this? Well, we need to look at the volume and we need to look at the price, that relationship between the effort and the result. So there was a lot of effort to push the price down, and at some point the price stopped going down. We actually, called the low really nicely, and then we see that there is still a relatively high volume signature that pushes the price aggressively up. Why would that happen this way? Well, because there are some very significant orders behind that price movement. And who would have that significant orders? Retail people? Well, probably not, unless we're talking about, the Robinhood kind of like community or IBD community where they have, a lot of big followers. But still, institutions are going to be the ones that are going to produce that momentum move up. And then the next stage is kind of like a convince a strategy stage. This is where a lot of institutional methodologies and systems are starting to tell them that they gotta be exposed to stocks. They gotta be exposed to risk. Otherwise, they're gonna underperform, and that's what drives them into the market space. And they have to find their selection, and that drives the price up. Bruce, what about Nasdaq? So Nasdaq has a slightly different picture. We definitely have had an all-time high already in June, and it's definitely an outperformer. So what are your thoughts on Nasdaq?
Well, the Nasdaq is in incredible leadership. It's been leadership throughout this entire bull market. And ironically, the FANG stocks, which really are the super cap, as of today, Apple Computer is a $2 trillion market cap company.
Amazing.
Is what my understanding is. And so that's just incredible. Well, these stocks are the real beneficiaries of the stay-at-home economy. So they're involved in social networking and so on. And so there's been real campaigning of these stocks and other stocks related to them by the large institutions, where they've just continued to drive the prices of these very high growth companies ever higher. So even when in June, when the Nasdaq 100 went up to its February highs and paused there, it just didn't spend much time before it just began to go into another important continuation of the uptrend. Roman?
And I would be thinking, Bruce, that S&P could do somewhat, of a similar structure where it goes above the all-time high and then just spend some time consolidating, especially thinking about the upcoming election, and some other things on the horizon that could produce that stop in action. That's a possibility. Another thoughts here on this chart is that, guys, look at the well-defined up channel that we are in. And this is so easy to use this technique. You can also use the moving average to see where the break of the trend actually happens. So until we actually have a break of the channel, I wouldn't be thinking, downtrend. That there is no reason to call the top. Just follow the market, follow the price. Also, there is a very common question from students: how is it that the price is going up on the declining volume signature? Is it possible? Is demand declining? Well, both. The volume is declining, demand is declining, but so is supply is declining as well. And until we actually have that type of break of a channel, a break of the moving average, and we have some kind of change of behavior, and the volume signature increases and supply increases, there is no need to think about anything else but the uptrend.
So we would see attributes of distribution, which is very much a Wyckoffian concept, where we would have a reversal off of some kind of a test of the highs that would come on expansion of volume, and then also widening spread of price. We would see the spread or the range of price day to day, week to week really start to widen out as a classic sign of distribution.
Absolutely. And in a very bullet point short message, we don't have this yet. So it is still an uptrend. Okay, well, Bruce, we've talked about the Wyckoff methodology and we've kind of, put it in the words of the theory. Um, you and I, we know that, we've been users of this methodology for decades, and it's been very, very helpful for us. In fact, I think that both of us are having probably one of the best years, that we have had so far, just because of how much volatility to the downside and to the upside we have. It's just a very unique environment, and if you're skillful enough, you could definitely benefit a lot from this. But what is the practicality of this methodology? Could we show to our students and to our listeners, how we use this? And we're going to use this as an example, NVDA, so a very favorite stocks for a lot of traders. So what kind of trades did we conduct here? In this trading range, going into the September, October of 2018, this drop right here showed to us a change of behavior. And this comes at the end of the trading range, at the potential phase D, after the final attempts in phase C to make the new highs and keep the price there. And obviously that happens also on the background of the market going down as well. If you recall, it was all about the tariffs and some problems with the liquidity. So one of the trades to the downside was opened here. Was not the best trade ever in terms of the continuation, but still was a profitable trade. And then the price went into the consolidation, and this is where Bruce and I, we picked up this trade and the stock in the anatomy of the trade for WMD, Wyckoff market discussion. So our first entry, second entry, and Bruce, I believe there were some add-ons along the way, on the way up. Please talk to us about this trade. What did originate this trade? Why did we even think about this trade? And I think it could show the practicality of the method here.
Sure, and we literally followed NVIDIA week after week in Wyckoff market discussion and updated its progress as these trades, and we call them hypothetical trades, over the course of this trend unfolding. But in fact, we actually were trading this at the time. And so I would just like to make the point back in October of 2018 that there was a series of higher highs that were being made back here, just as there is now on the Nasdaq 100. And so it just continued to have a confirmed uptrend. And I just want to reemphasize the point of look at what happened when the character of the decline changed. Spread widened, volume expanded, and it showed important weakness below key prior lows, which we call a sign of weakness. And that established that there was a change of character and distribution was in place. So I just want to emphasize what we were just saying on the NASDAQ. We don't see that now, but this would be something akin to this that we would expect to see that would tell us that there's a change of character in the NASDAQ 100 or the S&P. And we have no evidence of that at all at this time, but this is just making the point of our prior comments. So here with the situation with Nvidia back in 2019, as we were following this trade, was the completion of accumulation. And so this shows that the absorption of shares by large informed interests that were preparing to campaign the stock in an uptrend for the foreseeable future could be seen in the footsteps of the way that the stock was behaving as phase C, phase D was completing. Notice that there was after an important sign of strength here in April, May of 2019, that there was a failure all the way back down to the bottom of the trading range, but it did not make a new low. It's a classic last point of support, sets up a condition for an attempt to rally up, and it rallies right back up to the top of the trading range. Thereafter, each one of the lows that comes is on diminished volume, diminished spread, and it's making higher lows. And this is a classic telltale sign that the stock is being bid up by the large interests that are accumulating huge numbers of shares, that they see tremendous upside potential in the stock. We want to follow in their footprints, in their footsteps. Roman?
Yeah, and I liked our exit. We have identified climactic run. This is something that we study in our classrooms. And it just, the reversal of that climactic run was just such a screaming sign that, you know, this swing up is done. And if you think, okay, well, you know, maybe those two trades were like, okay, well, look at what happens next. COVID-19 reaction is very favorable. Look at the relative strength for Nvidia. It doesn't even show that it's losing the steam. It's still outperforming S&P. And our next entry was here. This is an actual trade that, you know, I'm actually still in it. And a couple of add-ons in different areas. I'm still waiting for the earnings resolution, but even this low comes as a higher low, comes with a lot of volume signature, really good relative strength, and you know, we are expecting a continuation here. So Bruce, I think this is a great example of the benefit of the studies. You know, it doesn't really matter, you know, which methodology on the price action you study, but Wyckoff method is very unique. It just combines a lot of the structural things with the tape reading, with the selection algorithms, with the specific tactical advantages. And I think that whoever decides to study with us is going to benefit from this.
And so we're constantly looking for these, the evidence of these large interests absorbing shares. We want to, in every case, follow the large institutional interests that are building positions in these stocks for big, important moves. Other stocks that are not demonstrating these characteristics, we just want to ignore them, step past them, move on to the better candidates. It takes a lot of work to develop the skill to be able to see that. Roman's been doing this for many decades. I've been doing this for nearly 40 years, and it keeps showing up over and over again, but you have to continue to be very focused on these nuances on these charts. I'd like to just say that in the March low, notice that the relative strength never even went into a downtrend. For most stocks, they went into a relative strength downtrend. Nvidia was continuing to say, I'm leadership. I'm going to continue to be leadership for the foreseeable future. These are the stocks that you want to accumulate at an important March low. Notice that the uptrend and the moving average, that Nvidia went right back to its long-term moving average and then found support there as the relative strength was making a higher low and staying above its moving average. This is saying this stock is leadership, even though the market was very weak at that time. And so, and then it continued to show important leadership and went to a new high, well above most other stocks, even in the Nasdaq 100. And so this is just a perfect example of this institutional ownership and how it manifests in the way a stock will go up. And with that, Roman, we are out of time. And thank you so much for being here. And you can see why I just love to talk about markets with Roman, talk about the Wyckoff method. Thank you, Roman.
Thank you, Bruce.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.